Ahora quiero darle la bienvenida a S&P y especialmente a Brian Luke. Él es Head, let me switch to English, Head in Fixed Income Indexes for the Americas at S&P Dow Jones Indexes. He has over 20 years of fixed income experience, and Brian leads S&P Dow Jones U.S. Fixed Income Indexes, which includes the S&P Municipal Bond Indexes, as well as fixed income indexes for Canada and Latin America. Welcome, Brian.
Thank you all for your time. It's a pleasure to be here. I'm here to celebrate my 8th anniversary of working at S&P Dow Jones Indices, and it's a great honor to be here to celebrate that with you all. It's also great to see a tremendous crowd of interested investors, issuers, and the entire economy around social bonds and everything around that. So I'm here to really talk about a couple different things. First, I'd like to talk a little bit about the key stakeholders of the market that creates and propagates the green social sustainable bond indices. I'm also here to talk about the global GSS bond market and what we can learn from that in Latin America. And I think it's a really necessary aspect to look at that. And we also want to talk a little bit about what the role of indices is and how that helps the market. So again, I apologize for having to speak in English here in Mexico City, but trust me, you do not want to hear my Spanish. So, S&P Dow Jones Indices has had a long and prosperous history within ESG investing, and it dates back 20 years with the Dow Jones Sustainability Bond Indices, or Sustainability Indices. So if you think about 20 years of ESG, it was quite a different landscape back then, but to be able to build a track record and understand the market, you have to have that length, history, and duration to be able to grow out into that. We've also done several other things for a long time. It was about 20 years ago, we built the iBoxx fixed income bond indices, which is recently acquired and part of the S&P Dow Jones family. So along with those indices, became the first investable passive ETFs that track those indices, and those have been out for over 20 years. So I think in 10 or 20 years from now, we'll talk about this meeting and this GSS market at its stage right now and how tremendous the growth is going to be. So I'm sure S&P Dow Jones will be part of that as well. In terms of our footprint, we look at things from a global perspective, but we also have a local experience. So that dates back to exchange relationships. Here in Mexico, we have a strong relationship with the BMV. I was working with the BMV to help bring together the S&P BMV fixed income indices when I started. It's great to be back here, my first time since the pandemic, but it's so great to be able to see the growth and prosperity of that market. We've done that not just in Mexico, but of course all throughout Latin America and globally. And that's part of our aspect and our influence to take a look at the global markets and understand it from a local perspective. Our products are represented across nearly every investable market there is, with 30,000 indices and roughly 150 billion in assets under management tracking those indices in fixed income only. Of course, we have well over $1 trillion in the equity side. But in Latin America, as you can see, there's over eight ETFs, $300 million in tracking that, and over 500 indices. So about half of the indices that we calculate and produce are in the Americas. And so the development and growth of that is integral to our ability and our way to measure and perform and understand the marketplace. When we think about the GSS market, I think we have to think about it from very different angles and perspectives. The issue of the perspective of the asset owner, I think, may be the most compelling and transformative that we've seen in the GSS market. And what I mean by that is taking an example of the world's largest sovereign pension fund, GPIF in Japan. Just 2-3 years ago, their CEO recalled green bonds as a lose-lose opportunity and wasn't necessarily interested. Now, just 2 years later, they now see it as an integral part of their investment approach and are directing funds through that process. So much like I think we can all experience some doubts and questions about the green bond market and the ESG investing approach. Maybe some of your colleagues have that, maybe some of them challenge that. You can see the transformation in real time through the asset owner community, looking at once an investment they did not approve to now a core holding and allocation directly investing to that. So starting with that asset owner community and taking that over to the asset manager community, there is an asset manager called BlackRock who now feels that ESG is part of their fiduciary duty. So it's embedded within their approach as an advisor to look at ESG from their perspective. And that's a powerful component when you consider that regulation and securities laws are integral and part and parcel to our approach. After all, we're not crypto investing, we're not decentralized finance. We have to operate in a regulated and uniform manner. And when you integrate ESG into that approach, it's ingrained within the overall outcome. Thinking about the regulators, and of course, I always look towards the European Union as a pioneer and a leader in some of the regulations there. I've seen that adoption carry forward across the pond into the Americas, albeit not quite as well adopted, but you see a lag there, as you also see a lag with the assets and growth of the issuance of the GSS market. I think that's a parallel that we can draw from here in Latin America. Lastly, we can talk about the issuers and the investors. If it wasn't for investors that coming to issuers saying we need to have a fixed income security, a green bond, that can actually come out and tell you what its use of proceeds are, then we wouldn't have this market to begin with. So you think about the specific roles each and part and parcel plays, you have to see the great influence and how all those pieces come together to form this market. Understanding the aspects of green, social, sustainable, S&P Dow Jones, we look at some of the leading data providers that cover that market, whether it's through the ICMA or Climate Bond Initiative, labeling securities, identifying the use of proceeds, creating the actual specific rules, and then having independent verification helps give the confidence of the investors to know what the issue is seeking itself to do. I think there's many phases and shades of that market, and it's developing and propagating into a more uniform space. And with these rules, how we embed it into our index and our approach gives some transparency and straightforwardness to the overall market. Thinking about some of the principles, I wanted just to lay out, and I think many of you know these things, but looking at the use of proceeds. And ESG can be somewhat difficult to conceptualize and contextualize, but within a fixed income security, you know what you're borrowing, you know what your assets are tied to, the collateral tied to that, and what it's going to be used for. If there is an argument for ESG to be not directly related to the betterment of the environment, I think that argument is harder to make in the green bond market. So and so forth as social and sustainable bonds. The market has grown tremendously. It's 1.4 trillion. Just last year, it surpassed 1 trillion. That's large, but not quite as big as the bond market is. But you see the depth and quality fill into it, as it was originally a skeletal process and now is getting more meat and flesh added to it. You can see the largest segment is the green bond market. Social sustainable bonds are quickly rising, and you see the similar trajectory that they're on. Those are on the lower level areas. We think about the issuers themselves. Corporations are around less than half, so that means the government bond market is actually quite a bit larger than the corporate investors. Our global green bond index looks at the 4 primary currencies, and as I mentioned, the European market has grown the fastest and is the most robust. When you look at the breakdown from a maturity, from a regional perspective, you see similar traits as you do in any global bond index. A well-diversified, well-captured, segmented market, covering all phases of the credit market, all phases of the maturity tenure system, and you can see the growth not just in one-off issuances, but across. This is the size of the sustainability-linked bond market. It's not quite the green bond market, but it's certainly growing, especially in Q2 2021. Locally, there's also the same approach has been taken, and we work with our data providers to help capture the local market. And in thinking about a universe of securities that can qualify for that, let's talk about the government space and how that has actually grown and been prospered over time. These are the types of green social sustainable bonds that are covered in our green bond universe, and how we actually look about the labeling and distribution of those. I think when you consider that market with around 26 issues and the growth of that 2 years ago being just a handful of bonds and a year ago being half of that, you see the influence, you see the growth, you see the interest from the issuer perspective. So bringing that back to what we've observed from the stakeholders and what we've observed from the global market, I think you'll see a similar trajectory at play. And we have to ask ourselves, who are those key stakeholders? From an index provider perspective, we like to measure the markets. But from an investment community perspective, I think it takes the asset owners, it takes the issuers, it takes the investors, and it takes the overall regulations to create a cohesive, strong market. So hopefully that was able to give you an idea from what we see in the European market, in the US market, and now here in Latin America, and some of the key aspects what we think is the growth. I would like to save some time if anybody has some questions, please in English. Sure. So what we're looking at here is the question was more about the local and the green bond market specific in sovereigns, right? So what we looked at in that last chart was a coverage of just those markets, and I would say that it's a similar proportion that we see globally between green, social, sustainable. Between the green bond market is the largest component, and so the Bonos Verdes, and how those play into that space. So I think that's what we see is similar here versus similar in other markets. Sure.
Have you seen any activity in the adaptation area by, for example, insurance companies are issuing climate bonds for various activities related to adaptation, crop insurance, that kind of thing?
Yeah, so the question is about adaptation and insurance involvement around that. I think when you look at some of the European regulations, the focus of environmental approach, there's two key principles. One is climate change adaptation and climate change mitigation. So from that role, more than half of the market, half of the corporate market has some sort of role to play. You cannot just be a passive player. You cannot just say I'm involved in energy and therefore I'm one or the other. You're either adapting or mitigating. And in the insurance market, having the coverage and ability to insure against those does play a significant role. In the financial services area is an area where it's still left a little bit more in the gray, whereas by banking, transactions, investing is not necessarily the forefront of what the environmental regulations are looking at. So, but you can see within different sectors of the economy, not just in the energy market, but also in the industrial space, in the financial space, other areas, they all play a significant role. And so what we do with our data sets is we pull out the actual contributions to revenue that are involved in that space. Are you part of the adaptation? And are you leading in your space in that adaptation segment?
Thank you, Brian. Francisco Suarez from Scotiabank. Talking about regulation, we're in the middle of trying to get a taxonomy here in Mexico and in many other countries. To what extent, how risky it is that if setting the wrong taxonomy might get in the way into the development of the markets, and if it is possible to actually be aiming for, Article 8 or so on the regulation in Europe? Any thoughts?
I do not purport to be a regulator or a influencer in that space, but I think from my perspective, knowing that there is a deep interest in transparency and an agreed upon approach, that I think from a global markets perspective, if you're looking for global investment locally, they're going to look to what they understand and how they experience their perspective. So if it's a European perspective looking to invest in Latin America, do they have to learn the new regulation? How much of it is applicable? And what can they do to bridge that gap? I think we see that in other markets where they have grown just a little bit too far, and so then the investors are not quite comfortable with that. I think we're a little more time for questions if we have any more. Great. Well, thank you very much. I appreciate all of yours and thoughts.